Ottawa isn't walking away from trade talks, it's simply shifting the table south. The uncertainty created by U.S. tariffs has forced Canada to speed up its long-discussed diversification agenda. That's why the Mercosur file is back on the table. What looks like a press release is actually much bigger. It affects trade routes, port schedules, shipping slots, and entire supply chains. The risks piling up on Canada's northern border with the US are now pushing Ottawa to rebalance toward the southern axis, starting with Brazil. These aren't just conversations, they're shaping the decisions businesses make every day. In trade, wherever the container docks, policy shifts in that direction. Why this matters: schools of thought may see this as diplomacy, but in reality, it's logistics and engineering. Port hubs like Montreal and Halifax are already highlighting the infrastructure needed for a steady south to north flow of goods. Details like dock cranes, electricity supply, cold storage, and customs rules, the invisible backbone, will determine whether this works. Behind the shift is a simple math problem: U.S. tariffs raise costs and uncertainty. Businesses wait before investing. The longer they wait, the more volatile prices get. Ottawa's move with Mercosur is meant to replace uncertainty with clear, written procedures. Business reactions: even before talks officially restart, trade actors are adjusting. Port schedules are being updated. Shipping lanes are being planned. Rail and trucking routes are shifting. Why? Because a visible timeline reduces uncertainty premiums, which directly lowers consumer price fluctuations. Canada-Brazil trade numbers tell the story. Trade volumes are strong on both sides. Brazil brings raw materials, agriculture, and industrial products. Canada contributes machinery, medical equipment, and energy tech. Together, they complement each other perfectly. But this isn't only about Canada and Brazil. Other Mercosur members, Uruguay, Paraguay, and Argentina, all want customs and non-tariff rules aligned with their own priorities. Agriculture, food production, and industry standards will all shape the negotiations. The bypass debate: is this about bypassing the US? Not exactly. It's more accurate to call this a backup route. If set up correctly, this backup would operate alongside the USMCA. That way, Canadian cargo could flow south even if US politics create bottlenecks. Every delay in Washington adds value to this southern route for Canada. Key sectors affected: metals and mining, certification, financing, and insurance matter as much as port costs. Agriculture and machinery, government-backed guarantees and credit speed-up deals. Automotive and EVs, tariffs and rules of origin could make or break the balance of imports, exports. Energy, bunker fuel, LNG terminals, and power grids shape shipping costs and cold storage capacity. Energy security is the backdrop. Without reliable power, the supply chain falters. Learning from Europe, the EU already runs trade deals with strict text-based rules on origin, health, environment, and competition. Canada knows this framework well, and if it applies the same discipline to Mercosur, uncertainty falls dramatically. Clear procedures and transparent timetables create stability before negotiations even finish. Big picture geopolitically, this revives the North-South corridor as an alternative to Asia-Pacific routes. Canada must balance deep trade with the US on one hand, new markets with Mercosur on the other. And the balance will come not from slogans, but from procedures. When a timeline is announced, businesses respond immediately. Shipping companies adjust schedules. Banks open credit lines. Insurance firms update policies. Customs authorities streamline duties. These technical details often move markets more than the headlines do. Final thought: the US tariff debate may harden or soften depending on politics, but Canada's priority is clarity, not noise. Every small step toward coordination with Mercosur reduces the uncertainty premium in the economy. The US will remain Canada's primary market, but not the only one. The southern table with Mercosur is Canada's safety valve as the 2026 USMCA review approaches. The words written today will set tomorrow's prices. Because in the end, the market loves text. It hates uncertainty. Right finger now, it's over to you. Do you see this move as a bypass or a backup plan? Where do you think Canada will see the fastest trade gains? Drop your thoughts below.